Well. Welcome back to Krown's Cryptocade. Third time today. Holy fucking moly, man. But I do want to welcome you back and want to wish you a nice, happy Friday as well. Did a little bit of a live trade earlier, which I actually just got done uploading. And of course, the live stream as well. But you know what? Back with some more, a little bit more longitudinal analysis to finish off the week. Why not? It's a fucking ritual at this point. I mean, I just don't feel like my day's complete unless if I do the videos. It's kind of strange in the way that that's really taken over. But today, I'm going to focus the first few minutes actually on options talk and what I've been doing for the past couple weeks and kind of how I'm managing these positions. I haven't really put too much focus on these just because I mean realistically at the end of the day not too many people are interested in options. It's like 1 degree complicated enough to where most people are just like fuck this, man, and rightfully so. If you're not trading as a living, or even if you are trading as a living, I mean most people don't need to bother with options. But I've gotten enough requests to actually talk about it, so I think it will be appropriate today. And then more importantly, why not just reveal this, what I'm doing, so then it's not like so fucking shrouded in mystery as we fly over beautiful downtown Chicago, which by the way right now looks nothing like that because it's actually overrun with zombie-like over intoxicated underage people enjoying Lollapalooza, which hey man, I've gone to plenty of Lollas as well, but now I'm scared to death to go to any fucking music festival, man. That's like the worst place ever for getting involved in some sort of one of those statistics basically. Anyways, we won't talk about that. That's all boring shit and also kind of sad. And I want to talk about some Magic Internet money, which is a little bit more optimistic. So I do want to wish you well. I also want to wish you the best of the best and the happiest of the happiest. And let's get in the live scene right here, right now. Beam me up, beautiful baby, and into the derivative screen right here. So you'll notice right now, Bitcoin, I am bullish on the medium and lower time frames, and I'm actually short a shit ton of calls. The same thing that I've been doing for the past few weeks. And in the past few weeks, I was biased to the downside. Now, let me explain what I'm doing here. So when I'm short these calls, I'm always happy to be doing this. I'm always happy to be doing the covered call whenever we're in a general uptrend. Just like during the downwards market, I was always doing covered puts. Why do I do this? Because it gives me a lot of leeway and a lot of options with how to manage these positions going forwards here. And let's just go over this concurrent example, which is literally staring us right in the face. So I'm short 5 of these 10,000 strike calls right here. The way that I think of that is it's paired up against my spot underlying positions, which right now I do have spot underlying positions. Sorry, actually, it might be a little bit more helpful to start off right here on my December, or on my futures, which I'm actually quite long from about 97.50, which I had to cover my last week's shorts calls. And this is going to all come full circle. Don't worry about this just yet. But I'm basically long from about 97.50, about 400,000 contracts on December futures, and then of course my base long positions both from 51.50 right on over here, and then on these perps, which really should be 39.30, but EU gets in the way, and I accidentally fuck up the trades a few times, and it destroys the average price. But for all intents and purposes, the real active price was about 39.30 on that one. So all those positions need to be covered, especially when Bitcoin was having some downside exposure, or sorry, some downside, hinting at downside last week. So just as a trader, I always want to hedge that off and make sure that the train keeps on coming. And as you can see right here, when I short these calls, the way that I think of it, especially when they're in the money, is that it's just the same as selling the underlying stock, or in this case, the underlying Magic Internet money, or Bitcoin, if you want to call it that. But basically what we're seeing right here is I've shorted 5 of these 10,000 strike calls. These are pretty, I wouldn't say that they're deep in the money, but they are certainly very much in the money. And so the way that I look at this is that I've already taken profit on 5 of those, 5 Bitcoins essentially off that total of about somewhere like around 60 right now for my open position on all of the futures accumulative. So that's essentially the same as selling stock 5 Bitcoins worth of stock, I guess, if you want to call it that. And then the average price that I was getting on these guys, I think was around 800, something like that. So I basically sold at an effective price of 10,800, while price action was obviously very much further away from that region. And I did it, I actually put this position on yesterday. So that premium was given to me yesterday, literally 1 week away from expiration. And I'm able to take profit on that same position, essentially is the way that I think about it, as it expires towards that area. So remember, the options, these call options or put options, are only ever going to be worth parity. And what's parity mean? It basically means that it's going to be worth the strike price Sorry, I shouldn't explain it like that. That's going to confuse me. It's parity means that it's only ever going to be worth what the underlying is worth at the time of expiration if it's in the money. So if it's out of the money, well, then it's not worth anything. Of course, it just expires worthless. But if it isn't in the money, then and if I sold it for $800, then that means Bitcoin could go to $11,000, and I don't lose $200. I just lose out on the potential profit of having an extra $200 on that on that rally. But if I sold them for $800, I get to lock in that $800, assuming that we actually close above the $10,000 strike. Then I also shorted 30 of these 10,500 strikes right here. So I'm net short about 35 contracts on Bitcoin, and I sold these guys for an average price of about $500. So that to me, if these guys end in the money, is the same thing as selling Bitcoin spot at about 11,000, already done yesterday, but expiring next week. So you'll slowly but surely watch this position evolve over time. And what I'll essentially do is I'll just sell more of these calls, which I look at as taking profit on my spot underlying positions without actually having to sell them, so I can keep them, keep on generating profit from it, keep the beautiful entries from it, and then keep the money still coming in. Because I think what a lot of people do is they don't realize their profits from their spot positions, and they end up letting a lot go. Options are beautiful for that, because you'll be taking some profits, and then you can keep on positioning it further and further out as the expirations comes. So for these guys here, my general strategy is I'll be waiting for the next rally on Bitcoin, which I am still a little bit bullish on the medium time frames. I think that the lower time frames probably consolidate a little bit lower, perhaps, but I'll end up probably selling like the 11,000 strike calls. Especially if we can get actually above that region, I'd love to sell those. Like for $500 or something like that, and pair it up with my spot underline, all until I see, basically until the point where I just see, basically until the point where I have the same amount of contracts done cumulative on these short calls paired up against my spot long positions. So that is how I like to do it, and that is how, at the end of the day, these positions are gonna make money. The only real risk is if we actually head back down below $10,000. If that were to happen, what I can do is I can just sell the 9,500 strike calls and then just keep on doing it that way. That obviously creates a whole a lot more of a complicated sphere of that, and hopefully people also understand what the fuck I'm saying right now. I'd imagine that the people who are a little bit more inclined in options, probably got that. The people who don't give a fuck, well, you don't give a fuck, so it doesn't matter. Anyways, getting the actual charts right now, as Bitcoin did get that coveted close above the yellow 20-month exponential moving average yesterday, and actually living quite well above it right now. So this is looking good for all intents and purposes to me. In fact, all higher time frame oscillators are switching around to a more positive posturing, if you want to call it that. Not positive. There's no real like positive or negative to be made off this. You can be positive, you can be positively bearish and be completely right, which is what 2018 was fucking great for. Anyways, looking at the daily right here, we do see daily Stokes headed straight to the sky right here. They have broken this little short interim resistance, and they're actually headed out of the bearish control zone, and will confirm as long as we end anywhere above about 10,500 by end of day, which is going to happen in, where's my watch? 1 hour and about 18 minutes from now. So by the time I'm posting this video, it should be confirmed, and you'll imagine that if we're closing anywhere above 10,500, then we will officially be getting out of the bearish control zone for the first time in about 2 weeks, and this is just going to align with this having carry on over into the other higher time frames, which of course carry even more weight. But while we are here on the daily, I do want to talk about the daily RSI. Daily RSI getting back above the exponential, and look at this. This is actually quite subtle here, but this is actually quite important. We see the exponential aligned at the edge of the bearish control zone. So both breaking the exponential and breaking the edge of the bearish control zone tell us the same thing with an extra confirmation, saying that, hey, we're ready to move upwards and onwards from here. And more importantly, this whole consolidation, especially Jesus, how long has this been going? About a month and a half now, really just oscillating between the bullish control zone and the neutral zone. Yes, was a small stint within the bearish control zone, but quickly rejected, more importantly, on this accumulation lows right here. Not only that, but we do see historical volatility percentile really getting way down below the moving average on this right now, which is indicative of kind of further solidifying this as one massive consolidation, which is exactly what you want to see as that contracts, as well as as an oscillator like that should. Going over here to the 12-hour, or I guess it's not really an oscillator. I mean, it's volatility. It's a mean reversion type tool. Anyways, let's see. Going over here to the 12-hour, we do see the 12-hour as kind of like the first interplay between the daily and it's like kind of like a higher time frame in a sense, maybe like a medium medium time frame. But more importantly, we did break this trend line right here, which I've already had in, but that was our first initial signal. And I just want to talk about this. It's obviously already passed, but we were monitoring this in, going forward. So people who are just watching this right now will look at this and be like, this is hindsight trading. It's like, well, yeah, but we were talking about this about a week before. I just want to follow up on it because when Bitcoin actually broke above this trend line, that's when things really started to lead on over into the daily. And let me explain why this is important, because right now we're seeing the same thing happen with the daily, which leads on to the 2-day. And we actually haven't seen the 12-hour daily and 2-day match up with each other on all momentum oscillators coming from the same sort of area. Very, very rarely happens. We haven't seen this happen since Jesus Christ. It's been a while. I mean, we did see an example right on over here. Sorry, right on over here from I believe it was first or no, it wasn't even this area. It was back on over here from 4th or 5th of June. It was coming out of this $8,000 base, basically doubling or almost doubling all the way to 14,000 just a couple weeks later. That was the last time that we saw all three of those guys align with each other. So the thing is that going off the daily, yes, things do look good, things do look nice, and the 2-day is going to be closing tonight, so it will have a chance to extremely likely close and confirm above the yellow 20 month moving average right here on the 2-day total time frame. And that's going to have carry on over into our momentum oscillators, of course, because look at this. As Bitcoin approaches this next major resistance and actually clears it, we do see 2-day Stokes, and this is the key important part. We do see 2-day Stokes really start to hint at across the upside, and we actually will confirm this later tonight at 8 p.m. Eastern Time, which again is in 1 hour and 15 minutes. So certainly should have clarity on this relatively soon. Not only that, but 2-day RSI, look at this, is actually hinting to get back above the exponential as well. So if we can get all these higher time frames on the same side, that's typically where the magic does happen from like the actual long-term trending moves. And it typically starts off with the 12-hour leading into the daily, leading into the 2-day, all aligning with the same momentum oscillators, all kind of, coming out of major massive bases. The last major base that we had was right on over here. Kind of similar feeling to this one as well, right? Because Bitcoin had just had a massive run to the upside, basically doubled from the past prior breakout, goes into a little bit of sideways here, accumulates, but and kind of scares everyone. I remember right on over here, and you probably remember this as well. Everyone and their mother was calling for fucking head and shoulders, baby. Target 6,000. No, 5,800. Fuck these bulls. We're done with this bull party. We're just gonna play it out for 2 months and then go straight back down. No, of course not. Market cycles like this, they truly take their time. Anyways, going back on over here. The reason why this price action is so significant is because we've actually spent a lot more time consolidating this area. So remember, this one right over here took about a month from May, middle of May to early June. This one right over here has taken almost 2 months from late June to where we are right now in beginning of August. So the longer time, the longer that we spend going sideways, the longer that we spend consolidating builds up what's called a bigger cause. If you're into Wyckoff terminology, which I think Wyckoff is great, but it's not. I mean, like you can still kind of make interplays with it in other kind of theories, I suppose. More importantly, the general gist of it is, hey, the longer that you spend building up a cause, the longer that you spend consolidating, the bigger the result, the bigger the breakout's gonna, be. And in this case, I would be leaning to the upside here, especially with, with this price action, kind of how we route off this area. More importantly, talking about this for just a little bit more. Remember right on over here, everyone was talking about head and shoulders back down to, whatever target in the 5,000s, right? Well, right on over here, what's everyone talking about? Everyone's talking about fucking gap boys down around here. Gap boys, what you gonna do when you don't get filled? Gap boys, wrecked. No, of course, at some point in time, the gap on CMEs coming in from the 14th of June is very much a valid thing and something that I would, keep in the back of my mind's eye going forwards here. But for right now, I don't see any reason to believe that we're just gonna head back down there like today or tomorrow. The only way that I get bearish right now, and key point, the only way that I really get bearish is if we actually close a daily total anywhere below 9,500. That's where I'd start to actually get bearish, because now we do have a true formation going on right here. So a breakage of that formation would be any sort of a close below 9,500. So it's kind of like a double-edged sword, but I would say that, there's a lot more good things going on than bad. And then more importantly, if that were to happen, then yeah, I'd be targeting to move likely into the 8,000s, anywhere around here, like 8,800, 8,200, something like that. But remember, when everyone's saying the same thing, when sentiment is quite negative, these things are typically priced in. And sentiment, if you remember, you probably do remember this, was pretty damn low. Just a few days ago, right? It was literally in the bear market territory right here. As you can see, this is literally the same areas that we would put in the lows during 2008, or sorry, not 2008, 2018, when Bitcoin was getting like really comfortable, like on its lows, getting stuck in the mud at 6,000 and rallying off there plenty of times. Well, Bitcoin has the same sort of sentiment here, but it's in an overall uptrend. So this was a clear and obvious signal, and this is why I was saying, hey, I'm not really bearish coming off this region right on over here. This looks like reaccumulation, and the thing is that we not only had that sort of negative sentiment, but we had that negative sentiment lined up with an event. And when you have a negative sentiment, lined up with an event, the expectations for that event are to be negative. The event being the U.S. regulation U.S. regulators talking about cryptocurrencies essentially. And so that gets priced in. The meeting happens. The world doesn't fucking fall apart. People realize that the sky isn't falling or anything like that. And what happens after that? Well, the expectation is it's not really met. It's not really destroyed. It's just it just is what it is. And we just float onwards and upwards from there. Of course, all the momentum oscillators on the time frames that we just looked at the beginning of this video, kind of turning around as well as we put in a nice little base upon a major, massive support. So I would say that is quite significant. And this area is now a huge pivot going forward. It's this area right here that I'm pointing towards, right around 94.50-ish region, which is likely to line up with that cyan 89 exponential moving average relatively soon. So I would be going off that, for a more long term. So keep that one in the back of your pocket. If we do break that area, that will present actual problems for Bitcoin going forwards from here. But as that also means, as long as we hold it, it's appropriate to have a both short and medium and long term bullish bias on this asset right now. Well, not short term, because short term, oscillates so many fucking times in a day. So I can't really say that, but medium and long term, yeah, it looks fine to me. So yeah, anyways, okay, cool. So we spoke about that. What else do I want to talk about? Let's go on to the 3-day. The 3-day did something very, very, very powerful yesterday as well. And we were we were monitoring this as well yesterday. Let me actually get rid of these alerts right here. They're not really useful right now. But the 3-day actually did not only close back above the yellow 20 exponential moving average, but more importantly, remember the one before it was really making me a little bit on edge. We did have a bearish engulfing dildo that actually closed below a major moving average, albeit while momentum oscillators and all the other higher time frames are kind of switching around, to be fair. So that was the good counterpoint. That was why, I wouldn't put as much weight on it. But more importantly, what did we do yesterday? We actually confirmed the last 3-day dildo above the high of the prior, which means a lot because we basically just erased it essentially, and we're at a major moving average, and we've actually already got a new high on top of that. So to me, this looks constructive. It looks good. And guess what? We're going to have the same conversation between the daily and 2-day that we're having right now, likely with the 3-day, as the 3-day Stokes start to lose a lot of momentum down around here. You see them converging on each other. Now they're not there just yet, and it can be career-ending decisions to front run those decisions. But looking at the structure of price action, looking at how we kind of close, near this area right here, it would suggest that this is to be viewed with a little bit of a bullish bias or a little bit of a bullish air. Looking at what are the tools saying right here, not really getting too much from the RSI and the Joule. If I had to say something about the RSI, I would say that we're just oscillating between the bullish control zone and also the neutral zone. In fact, we actually rejected quite harshly from the neutral zone, which is a good signal. We also see 3-day Joule kind of bouncing off this area right here, which is it's essentially a fib is what it is. So it's naturally access support, and that's kind of where we're coming off to right now as Bitcoin rears its head up once again, and all these momentum oscillators really start to get on the right side of price action, aligning with each other, and that's exactly what I want to see. Now, with all of that said, does that mean that I'm just blindly bullish on the lower time frames right now? Nope. Not really. The thing is with Bitcoin on the 4-hour, the 4-hour white 200 moving average right here is a pretty nasty rejector of price action. You can see that ever since we lost it right over here on 14th of July, that was kind of like the lead into the death cross on the exponentials. And more importantly, that really just put Bitcoin into a little bit of a spanner right here. And that also means that if we break back above it, which is currently at about 10,650 and also getting our current high thus far, then that would be a change of behavior on the short-term timeframes, and we can start targeting moves into the 11,000s, like 11,100, 11,200, at which point I'll be selling some more of these calls, and now you're seeing it. So then I make money on my spot long underlying positions, and then I sell the 11,000 strike calls. If we get above 11,000, I get to sell them for like $500. It's like selling stock at 11,500. I get to lock that in, not have to worry about the position, still keep the long underline, still make money on that from all the difference between that and the strike price plus the premium. Now you're getting it. See? Now you're getting it. Magical options once again. All right. So anyways, back in the charts right here before I get too excited. That's why I fucking love options, man. There's always something to do. Looking at the 4 hour right here, yeah, we are getting rejected by the 200 simple. I would say that this is quite a good response. This is corrective here. This is corrective and constructive, and I do like it. But likely to take its time. I do think that it's quite likely that we get rejected a little bit more from this guy before actually giving a legitimate chance to the upside. So the range for me right now is between about 10.6 and 10.3. Even on like the very low time frames, you could make that. You could say that on the medium time frames, you could kind of synthesize it down to these two blue boxes right here, which would put our bottom support right around 10.2, also confluent with the purple 200 exponential moving average, very, very important as we're about to get into. And then also the blue box up here, kind of analogous to the 200 simple to the upside, basically right around 10.7 region. So any move outside of this range would be a short-term change of behavior. If we move to the upside, I'd be looking for another test up here towards 11.100 to 11.200. This is actually not necessarily perfectly placed, but this area right here is also going to be a major area of interest right around 11.8, but that's still further away. And then of course, if we break this blue box territory to the downside right here, which I'm not leaning towards happening, but if it did happen, it's not a death sentence just yet. The death sentence is below this region right here, and it's still not even a death sentence, but we would go into a much more prolonged downwards move down into the 8,000s and probably even 7,000s after that. But as long as we're above that, I'm not really looking for that. But if we do lose this blue box territory right here, I'd be looking for a move likely back down to this region, back down to about 99, maybe 97.50, and then be looking for a short-term bounce there. And then I kind of come back and reassess it. But for all intents and purposes right now, things look fine. It just looks to me like a consolidation. We're kind of operating within this region right here. I don't have a strong opinion on like the super low time frames. Like the hourly looks like it wants to pop back up and test this region. If it does pop back up and test this region, I actually still don't think it gets taken out just yet, but it would be a very good sign for it to do that. Am I even speaking English properly? Probably not. But my point is, what I'm trying to say is that if we do pop back up here, I do think that it gets rejected once again, but we're going to consolidate at a major resistance, which is very, very important, because if you actually break it, then, well, you have resolution. And of course, if you actually consolidate at a major resistance like that, it's the same thing that that we saw around 5,500. What was it, a few months ago when everyone was saying that the 50 simple moving average was going to reject Bitcoin back down to its former lows. Well, no, when you consolidate at a major level like that, that's really fucking bullish, actually. Just like when you consolidate alongside a major support, I mean, that's pretty fucking bearish, so those sorts of things are, I think get lost in translation a lot of the times. I think a lot of people get that one wrong, or maybe I'm just arrogantly speaking on my own behalf. But you know what? Back into the actual price action itself, 4 hour Stokes looking for some downside here, and we see this mirrored with all of the lower time frames. So this is 3 hour right here, 3 hour actually creating a trend line, but I do think that this trend line ends up breaking. We're kind of like left with no more space to go. In fact, I do think that is breaking right here. Looking at 2 hours, same thing. Yep. And looking at hourly, hourly is actually already down there, but that does tell me that the hourly actually wants to work a little bit to the upside, but those other time frames say no, we're going to spend some more time going sideways within this region, just oscillating between about 10.7 and our current area right here at about 10.4, and probably tighten this up over the weekend, getting ready for the actual move. But here's the thing, talking about actual move, let's go over here to CMEs, which CMEs will be closing for the weekend. Actually, I think that they are in like literally 2 minutes. So this is actually very important right now. In fact, let me just go check on a lower time frame. Are we still ticking here? Yeah, okay, they are closed. Yeah, market is closed. We're delayed. Okay, so this actually closes at 6 p.m. Eastern time, not 7 p.m. Eastern time, as I was formerly saying. So I'm wrong on that. But looking at the week, more importantly, geez, get that shit out of my face. Looking at the weekly right here, we have something very, 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 very important. Do we have a bullish engulfing confirmed? We don't. Do we? No, we do not. We do not have a bullish engulfing confirmed, but this is a damn good response by the bulls here on the weekly. My biggest, and it's actually not even that bad on CMEs, but here's the thing. Here's what made this last week a little bit more difficult. It was the fact that that spot prices had actually closed the weekly below the red 10 simple on the last week they did a close. So that was my biggest contingency to being bullish on the lower time frames, which all the bullish things did outshine and did overshadow the bearish things, which is mainly just this in the 3-day, which we already saw resolved. So to see both CMEs almost get a bullish engulfing, but more importantly, CMEs never broke. They actually never broke here, and as you can see right here, they've regained back above the red 10 symbol. They have not closed below. And if we actually go to GBTC, which GBTC did close below on the week prior, what did GBTC close today as? And this is already confirmed. bullish engulfing. So to me, this is a damn good signal from from our higher time frames, and really assuaged a lot of my fears coming into today's close. So I actually really do like what we're seeing here, and I would say that that's likely going to line up with spot prices looking better coming into the weekend. As I mean, GBTC looks fucking phenomenal here. Actually, the daily does not look good. This is a sell right here. This is a sell. Quite obviously, but on the longer term of price action, it looks better. Yes. So going back into price action, where would this level kind of line up with, and kind of where would this move foreshadow based off of GBTC? If we had to make a an interplay between this, it would suggest that we actually go all the way up to about 11,200ish region, over to this region right here, our 14th of July breakdown right here. So that's actually what that would suggest, and it would suggest that we also get a rejection from there. And you'd imagine that kind of testing this area after the last few times of getting rejected here, probably going to align with that. But I would say that the greater picture in whole is still certainly more constructive. So a rejection there would only be a lower time frame, medium time frame thing to deal with, and we start filling out this area a little bit more between 10.5, 10.6, and 11.2. Which Bitcoin's had a lot of issues around, but if we can actually maintain above there, that'll be a change of behavior and also be considered constructive and just generally good. Anyways, we spoke about all of that. Okay, all right. Do we want to talk about traditional markets? Yeah, let's talk about traditional markets. Traditional markets, pretty fucking god awful close on the weekly right here. Did close below the red 10 simple, yeah, by about $0.50. And are we seeing our first etchings of a reversal here? Perhaps. In fact, my mentor actually does think that this is reversing. I am not so quick to call something like that, but I do think that coming into next week, we actually rally up here. We probably actually rally back up maybe to like 296.5, 297, but I'd be looking for that to get faded. If this is going to be a legitimate reversal where we come back down to like maybe 281.5, 282, something like that, somewhere back down around here. But for right now, I'd say coming into next week, I'd actually be looking for this to bounce first and foremost, and then if it's going to spill over, it probably spills over. But for right now, a little bit too early to call it, and actually don't feel too confident on this one. We do have some bearish divergence quite present on the weekly, but we already kind of hit the easy target for that down at the 21 at about 289, just about a buck off there. So it does make it a little bit more difficult. Looking at weekly Stokes, they are crossing the downside. They are primed, but again, that's not the worst signature coming from that region. It still could just be a consolidation rather than a true reversal. I want to see it on both the RSI and the Stokes, which we actually do see. But let's go to the monthly and see if there's any sort of hints here in the price action. And yeah, we do have a pretty nasty hint right here. We did take out the low of the last monthly diddle, so this is a doji diddle right here, and to take out the low of it would incite that this doji diddle is a sign of indecision, and now we're actually getting resolution by taking out the low side of it as a reversal, is what it would suggest. I am still a little bit too. It's a little bit too early for me to get bearish on anything like this. That's been operating so well for so long. But looking at monthly Joule, it is lining up here. If you have access to the Joule, man, watch for that next tick. If you see the light blue oscillator flatten out. The last time I discounted the Joule, I missed the short from 11,800 down to about 9,500. That one fucking hurt. This would likely be akin to that. That would be pretty damn good right there. But obviously needs another month to play out, and we just got the new one. Looking at monthly RSI, we're getting rejected by the RSI right now too, but still a little bit too early to be judging that one. So yeah, I'll kind of leave it at that. Anyways, let's go check out Bitcoin dominance for a second. Ooh, my ground beef coming up once again. There we go. Bitcoin dominance. What are we seeing here? Yeah, might as well start off with the monthly. Monthly's massively bullish. Like I've been saying for a while, I am macro bullish on this baby. The lower time frames, however, I do believe that we are kind of getting into an area where I would be looking for a pullback. We've actually even overshot the area that I was looking for. I was looking for 68.5 on this bounce back up, but this is starting to look better and better. Am I going to be wrong that this ends up coming back down before we actually begin the real ascent? I think I might be on this. I think it's very, very possible that I might be on this because this move so far is looking very, very good. We've held the 21 extremely well. Daily oscillator is getting going once again, and daily RSI looking fine. The thing is though, you can't really use oscillators and something like this. You should just be able to look at Bitcoin and kind of judge it because Bitcoin really just trades against the dollar, right? It doesn't trade against the altcoins. The altcoins are just kind of like riding on Bitcoin's coattails for the most part. Of course, I don't want to sound like a fucking Bitcoin maximalist. I think that I think it'd be naive to think that that all these coins are garbage. They can't all be garbage. There's certainly going to be some very, very successful ones, but they're going to be few and far between as well, I'd imagine. Anyways, more importantly, Am I going to be wrong on on thinking that this rally is going to get faded before we actually begin the real rally? I think it's very possible here. The weekly's looking good. The weekly still has to chew through 69%, but 69% is just right overhead now. And again, it's that same discussion that we had earlier. Consolidating at a major moving average, that's bullish as fuck. That is bullish as fuck. It's going to take its time. I mean, shit, man, it could be another like couple months of just grinding this area out, but that would be massively bullish. And of course, when we look at the higher time frames, it is quite literally bullish. But I think I'd still kind of stick with what I'm saying. I don't think that we see I don't think that we see the major move from this area just yet. I do think that it's a little bit more likely that we actually head back up maybe a little bit higher towards 69.5 and then come back down and accumulate in this area a little bit more and get ready for the real breakout, you know, maybe like a month away or something like that. So alts, I do think, get a little bit more hurt in the very, very short term. Then in the more medium term, they probably get to rally up once again. For a little bit of time, but long term, like I said, I'm massively bullish on this. So months down the road, I'd have to say that's it might not look too pretty, but hey, the strong alts are telling you right now about the ones, by just basically being the ones that haven't been looking like shit for the past year essentially. So I think that is worth mentioning as well. So yeah, I'd basically be bullish on this medium and long term, or sorry, short term and medium and long term, but medium term, I still do think that it probably comes back down, but I do think it's a little bit less likely that we actually get back down to the 65 or 65.5 region here. I think it's actually more likely with the advent of this price action that we've set in a base at this level and then rally up from there. So that's going to make it very, very difficult for a lot of alts to rally versus Bitcoin. But of course, alts will be rallying versus the dollar. But what this chart would suggest is that most alts, if you're holding most alts, you wouldn't have made as much money if you would have just held Bitcoin. With some alts, you're probably going to make some more. Of course, we're in a market of a million of infinite possibilities. But for the most part, that's kind of what it would suggest. Anyways, looking at, as I look at my camera over here, there we go. Hello, camera. Look in my eyes. Look at my eyes when I speak with you. Let's go check out the other top shitcoins. Speaking of, let's look at Mr. Buteral. Mr. Buteral, certainly the sickest of the big three, if you want to call them that. Still operating in the confines of this symmetrical triangle right here, being governed more importantly by the purple 200 exponential moving average to the upside. So as long as we're closing daily totals below there, and especially as long as we're opening and closing daily totals below there, I don't see any sort of reason to get excited about Mr. Buteral. The biggest reason to get excited about Mr. Buteral is just the fact that Bitcoin and Litecoin look like they want to have some upside here, because those ones seem to be leading the market. In fact, it's not even really Litecoin anymore. I think it's mostly Bitcoin. And there's probably some alts as well that are also leading or doing some different, so to speak. But I don't really spend my time looking at them, so I don't really know what they are. The best one for me to go off of is Bitcoin. It's like a general just a general rule of thumb. But looking at Mr. Buteral right here, I'd imagine that if Bitcoin does take this next leg to the upside, you're going to see Mr. Buteral head up to this 245 region. Would be the measure move off this symmetrical triangle, but of course, symmetrical triangles equally likely to break out to the upside as to the downside. I need to see a daily total close above 222.5, the 200 exponential moving average right here. Then I could get bullish for move up here towards 245. And realistically, if we get up to 245, yeah, you probably go through a little bit of a short-term pullback, but more long-term, I think you'd find your way back up here towards $300. To the downside, if we do break to the downside, which I'm not leaning towards, but if we do below 208, then I'd be targeting to move actually down to about 180, 185 region. What about Mrs. Litecoin? How's this beautiful bitch? Oh man, faded that breakout real fast. Coming back down to, sorry, don't mean to get excited or blow any eardrums. Do you want to have a little bit more of a relaxed demeanor today? Just kidding. Looking at the daily right here, actually did come back down, test perfectly the red 10 simple and also the breakout point from this past little formation right here. It looks quite similar to Mr. Buteral now, doesn't it? But more importantly, we actually can set in another horizontal right here, basically at the exact point where we just tested, also confluent with the red 10 simple. As long as we remain above there, let me actually get rid of this guy right here because it's too fucking convoluted now, and even this guy right here. If we do break below this area, as I struggle for my words with my stupid stutter, which is probably annoying as fuck. Sorry, it's embarrassing to me as well. But if we do break below this area right here, then yes, I'd be looking for another retest down towards $88. But same thing as kind of Bitcoin at that 9,400 level. I can't get bearish on Mrs. Litecoin as long as she's closing daily doodle, and especially opening and closing daily doodles above the 200 exponential moving average. It's not until we both open and close a daily doodle below the 200 exponential at 88.5 1.5, where I'm really going to start to, put the pedal on the, on the gas for looking for actual downside moves. For right now, I think that this is just a quick retest of supports, and we're looking at, a generally illiquid asset where you can get this very nasty price action at. And it probably holds. But hey, if this area does break, then yes, I'd be looking for another test down to 88.5, and that's where you have to kind of hold your breath once again, because if that area does break, then bearish bias actually for much further down. There will be bounces along the way, of course, but it would incite a bearish bias overall. But yeah, this is why I say Bitcoin's actually looking a little bit more like the leader of the market right now, when it's kind of suggesting that it wants to continue up here. When you have Mrs. Litecoin actually coming back down and testing supports. Looking at daily oscillators, we still see daily Stokes to the upside, so I do like that. Daily RSI is breaking the inner. Wait, get over here, you fuck. Sorry, my autistic rage is coming out again. The daily RSI kind of getting out of the bearish controls, and as you can see, looking a little bit more constructive, but very, very sluggish here. It's hard to get too much out of this actually. Looking at the weekly, how's the weekly looking? Weekly's in a very precarious place. If the weekly closes anywhere below the yellow 20-month exponential moving average, which is actually $94, major warning sign. If it closes above, generally good, probably makes its way back up towards 115 to 120 in the more long-term, months down, maybe like another month or something like that. But it's really going to come down to this weekly close. So this is very, 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 very important. If we can actually close above the yellow 21, generally good. If we close below, maybe a little bit of a downwards bias. We came just short of taking out last week's high, which does, the problem with that is that it doesn't give us any clarity on the situation as it is right now. We have to wait for the close, essentially. If we would have gotten above last week's high, then, could have a little bit more of a bullish bias here, but not right now, no. Looking at weekly Stokes, we do see weekly Stokes coming way down, actually into the neutral zone. We haven't seen this level hit since February of this current year. And in weekly RSI is actually showing us a few things here. So if we can confirm this as a local low, which we have not done just yet, we need to really get back above this region right here, or close the next weekly dildo above the 21. We need to both open and close above the 21. Then we could confirm this as a local low. If we can confirm this as a local low, that has a double implication, because that'll lead on over into the weekly RSI, which right now is printing printing hidden bullish divergence if we were to get that. But right now we don't have that just yet. And in fact, going on to Bitcoin, I want to see something similar on over here. And do we have the same thing perhaps going on? If Bitcoin can take out last week's high, this will confirm this as, well, it's actually not going to be a bullish engulfing. Only CMEs and, only GBTC is going to be a bullish engulfing, and CMEs are just kind of erased the last week's dildo. There's not really any sort of a word for it. But more importantly, if we could actually get above this region and confirm this as a local low, then guess what? The same topic of conversation. We could talk about this point and this point being hidden bullish divergence, and pretty severe case of it as well, which would incite that we get back around $12,000, maybe even $13,000 during this consolidation. Typically, the hidden divergences are going to, just get you up to your next level, your next major resistance or support, depending upon which, side you're coming from. In this case, to the upside. Anyways, spoke about all of that. I think we've spoken enough about that. Let's go check out the expected moves with regards to historical volatility. It is contracting as you will notice. So the ranges are getting smaller, which does kind of align with our general, view on the, on the macro, as this being a massive consolidation, and it would have a little bit of a bullish bias, as you do see it kind of squeeze into the upside here. And more importantly, it lines up perfectly with the areas that we're looking at, which is exactly what you want to see as a trader. As a first standard deviation to the downside is about 10,250, so that's the daily 21, and then the first standard deviation to the upside is about 10,750, which is the top of our blue box, just ever so slightly above the 4-hour resistance right here. So I kind of look at them as one and the same. Basically, these two blue boxes right here, both correlated with major pivots on the market. Let's go to the daily. Oh, and I forgot to talk about one thing just really quick, but I suppose I've spoken about enough already that people probably already have it ingrained in their minds. Or if you're new here, then I guess I'll kind of suggest that you watch the video that I uploaded on Sunday in the long-term analysis playlist, or any video from last week where I spoke about this, and I'll just kind of briefly touch on it now. I don't want to bore the people who have been here for a while, but the 4-hour dildo death cross is certainly losing its strength. As you can see, this was this was obviously a major topic of conversation for good reason, the last 2 weeks, as we got it confirmed right on over here, the death cross between the green 50 and the purple 200, and price action did have some fall through to the downside. We dumped about $1,000, a little bit more than $1,000 from that point, and right now, more importantly, you do see that as as long as Bitcoin is above the 200 exponential moving average, these guys are going to converge on each other very, very rapidly, and any sort of move down to the 200 exponential moving average is typically a buy, basically. based off that. Now, this is not financial advice. I'm not a financial advisor. Will I be adding on that, on that area? Probably not, because my streamer account's already a little bit too big for a little bit too big for my own comfort. But if I was trading this actively right now, that's what I'd be doing. Maybe I'll sell some puts on that area, something like that, easy to cover as well. But I'm a lot less inclined to sell puts in a general upwards market. I'd rather be buying the spot underline and selling calls against it. That's my go-to strategy for that sort of thing. And then you can always spread them out or strangle them out as well. There's plenty of ways to handle it from there. Plenty of fucking ways. And you'll end up doing like some sort of fucking long iron condor fucking bullshit butterfly, whatever the fuck it is. These things have such, crazy names, which probably just serves to confuse most people. At the end of the day, man, they're just mostly just deviations of spreads, straddles, and strangles. It's really all it is. And then of course, just using the spot underline to cover it as well. So covered call, covered put. But that's the basis of anything. Anyways, talking about the 4-hour dildo death cross. Before I get too sidetracked. I've actually gone over all of the death crosses from the past prior upwards markets. And the death crosses on average take about 2 weeks to play out, as little as about a week and as much as about a month. And right now you do see that we're actually around that 2-week mark. You can see that we got this on the 22nd of July, and we're coming up to the 2nd or 3rd of August now. So it's been about a little bit more than 10 days. So 13 days. We're actually literally coming up on 2 weeks, in this next, 24-hour session. So on average, typically it does take about that time. And, and usually the golden cross following the death cross is usually pretty damn good. I mean, I'm sorry, I shouldn't say usually, but each and every time that I've seen them in an overall general uptrends, they get a lot more continuation. So I would say that is, a valid strategy. Of course, it's not financial advice though. Just kind of sharing what I'd be thinking in those sort of same situations. So for right now, to kind of wrap this bitch up, as I do overextend my time once again, sorry about that. I wanted to make this one shorter, but probably did a terrible job for that. What I can say here is that Bitcoin getting rejected by the 200-cent moon average. Yes, lower time frames probably do consolidate a little bit lower. Or sorry, not necessarily even consolidate lower, but just consolidate between this region between 10.4 and 10.7. I don't see really anything changing here for a little bit of time. And I'm just kind of looking for that to play out as the higher time frames start to close and we get more momentum on the higher time frames. That's essentially what I'm looking for. I'd still kind of have an upwards bias on the medium and higher time frames, but the lower time frames consolidating between 10.4 and 10.7. Any sort of a break above this region right here at 10.7, and I'd be targeting a move towards 11.1 to 11.2 over time. It's not going to happen at the snap of fingers, but over time, yes, I'd be targeting a move towards there. And of course, these are only just general targets. Shit happens at some point in time. It ain't always going to be perfect. And I actually feel a little bit disingenuous the last few weeks where I feel like I've gotten things, relatively right. I'm not always going to get things right, man. So don't blindly follow me. Seriously, don't blindly follow me. In fact, a couple weeks ago, I got some like pretty major things wrong. I got this area wrong right here. I thought that we were going to rally up from this area. Nope, I was severely wrong. But more importantly, with my trading style, I didn't take any hurt from that. So that's so that's why I really try to separate myself as a trader. When I am wrong, either my losses are quite minimal, or with the use of options, with the clever use of options, you can usually turn those into gains. Anyways, with this price action right here, mostly sideways on the lower time frames, medium and higher time frames, still have a slight upwards bias, I suppose. Any break above here, targeting move towards 11.1, 11.2. Any break below here, and I'd be targeting a move actually towards 9. Let's actually raise this down. No, it should be right around here, right around about 9,900. So if we do break this region, it's not necessarily that I get bearish, but I would be looking for a move to the downside. I only get bearish below this area right here. If you want like the super low time frame look, you could say any sort of a move back down below 10.4, and I'd be targeting a move back down here. But that's really too low to even consider right now. It's really these two blue boxes that are going to be running price action for now. So I think that's going to do it for today's Friday early evening update. I do want to wish you well on this lovely Friday as well, whether you're going out there and enjoying your night, dancing on top of tables, drinking all sorts of dirty waters, or you're going to be watching Magic Internet Money pixels on your computer screen like me, then, well, I'm wishing you all the same. And as always, take care and see you soon.